This is Alan Farley from FX Empire. American retailer Best Buy is trading higher by more than 4% after blowing away second quarter top and bottom line estimates. Looking back, the stock topped out in the 80s back in 2018, declined with world markets into the end of the year, and then recovered into 2020, breaking out at the start of the year and then failing to break out during the pandemic, coming all the way back to the 2018 low and testing that successfully. A return to the first quarter high in July 2020, and then took off in a rally that showed just two legs, one up to here and another one up to here in November. Now that marked the top here in November, right about the 125 level. Stock has really underperformed since that time, and now we're talking really now for an entire year because it traded at the same price level as this morning on the third week of August of 2020. So the return in the last 52 weeks has been zero. Now, as you can see, it's developed sort of a complex pattern here, testing support at the 50-a-week moving average, and it's turning higher this morning, trending up around 118. However, this pattern is kind of funky looking. As you can see, it's sort of developing into this broadening formation or megaphone. So I think there's some danger here with these lower lows and potentially higher highs all the way up to about 130. Now, the bulls are going to need to clear about this 130 level to really bring in some momentum, perhaps get the stock up to the 150 level. Now, this has been a tough year for a lot of American retailers because of their outsized returns last year. So there's no guarantees that the stock, even though it's turning higher, will be able to mount this ceiling of resistance right here. And we also have to watch out for a break of this 50-week moving average because that could expose the decline all the way down to the 200-day moving average in double digits.